You're here to learn about how Tattooed Chef stock can make you rich. So today we're going to do a quick analysis on it, and I'm going to share a little bit about what the company looks like going forward and my thoughts on the stock at the moment. Last week we ran a poll on the channel and we got more than 550 responses. Looks like you guys love Palantir and Tattooed Chef. There were a bunch of other ideas that you guys brought up too that I am looking into, but I've been wanting to do a video on Tattooed Chef for a while, and your interest, your votes, helped me figure out what to do for this week. So in this video, we're gonna do a brief overview of the company and look at what's so dope about them, look at some of the numbers, look at some of the growth trajectory and things like that. And if you want to, I can do follow-up videos comparing them to competitors or looking a little bit more at the numbers as well. But before the video starts, please let me know down in the comment section, how many of you guys already actually own Tattooed Chef? Like, I'm really interested to see if you do, and if so, was it like just recent? You bought it during the recent dips, or was it like you've been in it for a while? Let me know down in the comment section. And while you're down there, hit the like button too. So I've split this video into 4 major sections, so feel free to use the timestamps down below to jump ahead to whatever suits your needs. So first, we're gonna look at what makes them so good. Second, we're gonna do financials. Third, looking forward. Fourth, some of the potential risks. And then 5, I'll finish with my thoughts on the stock too. I've mentioned already a few times on the channel that I've been buying Tattooed Chef over the last few months. I've liked the business and I've liked the products, but I haven't really loved the numbers until recently. Check it out. Here is the 6-month chart. You can see kind of swinging up and down between 18 and 27 bucks. Right now it sits at about a $2 billion market cap. It's kind of a baby in the market. Just for reference, Beyond Meat, one of its biggest competitors, is at about 8 to 10 billion at the moment. And a lot of the other really big food companies that, you know, Warren Buffett and these kinds of guys invest in are way bigger. I have mentioned in recent videos that companies like this, basically food, you're always gonna need food to not die. So people tend to be buying food all the time. And so when there's crazy drama in the market, like we saw in the last couple of weeks, probably most likely based on the quick uptick in the 10-year treasury rates, you don't end up with like huge volatility in a stock like this, whereas something like Tesla or something more speculative, some of my speculative holdings went down by like 50% in like a week or something like that. So stocks like this are a little bit more stable, even though they're young, even though they're growing, and even though the market hasn't really figured them out yet. Food is more stable than tech in a lot of situations. So Tattooed Chef is a really interesting company for 2 main reasons. Number one, we know that a rising tide raises all of the ships. And right now, one of the rising tides in the world marketplace is a shift to working at home. And when you work at home, it's really easy to just eat junk and then turn into a tub. And so we're seeing in the marketplace a really big growing demand for healthy yet frozen foods. And Tattooed Chef is like right there to fill that need. We saw in 2020 that frozen food sales were up 21%, according to this article on Supermarket News, and Tattooed Chef is capitalizing on that shift. And you're probably already aware, regardless of where you live in the world, you're probably already aware of the fact that there is a general shift to more sustainable eating practices. We know that meat costs a lot of resources, and the whole idea, the whole concept of vegan or vegetarian is also growing in popularity, and Tattooed Chef is right there along with it. So Tattooed Chef main thing is plant-based foods, but they're also branching out into areas where like people haven't really thought about making plant-based foods, especially frozen ones. So check it out here. They have cauliflower crust cheese pizza. They have cauliflower mac and cheese bowl. They have acai bowls. They have all these different kinds of things that people haven't really considered to put into like the frozen section. Check it out here from their investor presentation. Tattooed Chef offers plant-based options across multiple doors in the frozen department. So it's not just smoothies. It's not just vegetable blends. It's not just meat alternatives. It's also plant-powered pizzas and single-serve bowls. And so you're not just buying from them like dinner or just dessert or just a veggie bowl type thing. You could like cover all of your meals with Tattooed Chef stuff. And their pricing is cheaper than going out to like a vegan restaurant or something like that, but it's a little bit more expensive than typical frozen food, which is also known to be very junky. Tattooed Chef's second superpower is that they actually started out as a private label food producer. And so basically what that means is that they weren't selling Tattooed Chef stuff. Simply put, that means that they were creating products for larger brands to label as their own and selling through those brands. As a car guy, I always analogize things to cars. Yamaha has actually been making engines for Toyotas for a long time. A lot of the classics and even some of the newer ones, but the customer doesn't know anything about that. They just see it as a Toyota car. So Toyota's, in a sense, outsourcing the production of that engine to Yamaha. And so in the food world, examples of this is Walmart's Great Value brand or Costco's Kirkland brand. They're not necessarily like setting up their own farms and setting up their own recipes and production plants. Basically, there are food makers who make generic stuff and they say, hey, Kirkland, you want to buy our stuff for cheap? You can mark it up and make it Kirkland and sell it at Costco and keep a margin. And so that's what Tattooed Chef started out doing, and they still do that a lot. But recently, I think it was in 2017, they started their own brand. And then soon after that, in the SPAC, went public. And then in the fourth quarter of 2020, their own Tattooed Chef brand sales actually passed their private label sales as well. Because they know how to make food that sells broadly and they have a solid foundation of clients, they can power exploring new dishes and trying out new things that other companies might not have the breathing room to try out, including these 6 new ideas that they just launched exclusively at Target. Check it out. They have cauliflower mac and cheese bowl, cauliflower pizza roll with plant-based pepperoni. Say that 5 times quick. Veggie hemp bowl, Buddha bowl, plant-based burrito bowl, and enchilada bowl. So they're making a deal with Target saying, hey, we're only going to sell these at Target. Target's happy because people who love Tattooed Chef brand will come to Target to buy those things. Another one of Tattooed Chef's special assets is Sarah Galletti, the actual Tattooed Chef. She's the brain behind coming up with all these new recipes and things like that. And so her father, CEO Salvatore Galletti, or Sam Galletti, has been running the company, and he's been in this industry, I think, for 25-ish years already. So he's very experienced, and he's also capitalizing on his daughter's creativity. He's brought together a bunch of powerhouses from other companies with a lot of experience in the industry and other industries to power the growth of this company going forward, which seems to be going very well so far. Speaking of growth, in their most recent earnings report, they stated that they're expecting to increase the store count of partners that they work with by 41% and the number of points of distribution of their branded products by 35% by the end of the first quarter, like right now. Sarah also mentioned that they have 38 SKUs right now. SKUs are stock keeping units, which are like the barcodes. They have 38 different items available, but they're pushing to be able to get up to about 150, which are apparently already in the works. That's pretty impressive, and probably will further expand their breadth across meals and desserts and snacks and heavier meals and lighter meals and things like that. So moving on to their financials, they showed that their total revenue was up 48% year over year from 26.8 million to 39.6 million. That's definitely really exciting numbers to see in this industry. Typically, we're used to seeing like, yeah, we grew by 3% this year kind of thing. And when you see young kind of guns blazing companies like this busting out and showing the world that they have new ideas, they're providing more value, more health, more sustainability at good prices that are also really convenient because they're frozen. I think it's kind of the makings for a really big shift in the market. And Tattooed Chef is one of the pioneers of this whole industry, I think. They also mentioned that their branded product revenue is up 172%. From 8.8 million to 23.9 million year over year. So that's like all the non-private label stuff. Everything that says Tattooed Chef on the box grew 172% year over year. Now we need to be a little bit careful on this next part. I know a lot of people saw this number and got really, really excited, and it's a little bit tricky. It's a little bit deceptive because you need to look into the explanation a little bit. Check it out. Here we have a HyperChart showing the net income. It says it was up from 2.2 million to 41.5 million. But actually, when you go in and read the notes, 40.1 million of that actually comes from a tax benefit they received when they switched from being an S Corp to a C Corp. So depending on what kind of corporation you have, the tax rules are different. And so it looks like they grew and made way more profit, but actually like almost all of that is just like, oh, we got to pay less taxes. Cool, kind of thing. So be aware of that and don't get too excited about the stock at the moment. And if you hear people being like, dude, look how much they've grown. Yeah, they're growing. But the bottom line, the EBITDA, isn't so different yet year to year. but I think that's going to be growing going forward. While revenues, as well as cost of goods sold and gross profits, all basically doubled, operating expenses more than doubled, netting a smaller operating income. You can see here they went from 6.2 million in 2019 to 4.1 million in 2020. So that income tax benefit I mentioned a minute ago is really what brought them over the hurdle, making them look super solid this year. So that can be a bit deceptive if you're not looking out for it. But when companies are just getting started, it's pretty normal to see like big jumps in R&D or big jumps in marketing, which actually we didn't see with Tattoed Chef because they don't put a lot of money into marketing. They depend a lot on word of mouth. But you also do see jumps in stock-based compensation and stuff like that, which we saw a little bit of. Nothing like deal breaking or anything like that. And so going along with their hope to raise the number of SKUs going forward and in the future, like all of this looks pretty typical. And I think what they need to be doing right now is what they are doing. They're boosting their cash position, and they're also gearing up for accelerated growth going forward, which we'll look at in a minute here. I also did want to take a look at the balance sheet and note especially the cash position being massively improved, while all other asset categories have grown year over year as well. Check out that cash position going from 4.5 million up to 130 million. That's always nice to see. Accounts receivable, inventory, prepaid expenses have all gone up. Inventory going up is like not necessarily a super awesome thing, but it's not a red flag either, especially for a company growing at this rate. And so going on to future outlook, Tattooed Chef also provided a bunch of graphics that help us to understand where they're hoping to go into the future here. Check it out here. They show the total addressable market, the TAM, as well as Tattooed Chef's near-term opportunity. They're saying 12.6 billion in the near term, and we're aiming to be hitting this huge market of 33.9 billion in the coming years, which is prepared foods and meats and vegetable pizza fruits and all this stuff. So this is looking at the total US frozen retail sales of 55.2 billion. And so right now their revenues sit at about 40 million, and they're saying the total addressable market that we could be dealing with is 55 billion. And so we're going to look at some of the partnerships that they're busting out with going forward here, which will help them to get there. They also showed here compound annual growth rate of 68%. And then I mentioned a minute ago, no marketing or branding expenses going on. Check it out. They're an established brand with 640% year-over-year revenue growth. Then on the right side there, they go on to mention that they're vertically integrated. 200,000 square feet of manufacturing. They doubled their capacity in 2020, and their capacity will double again in 2021. Check it out here. They show a bunch of the distribution agreements with strategic national and regional partners. They show like a load of them all over the country. And that's one of the things that's really crucial, because when it comes to like really health foodie type stuff, a lot of times you see like on the coasts, health foods can charge premium prices, and then they just kind of stop there, and it's hard to penetrate into the center of the country. But seeing that Tattooed Chef is starting to penetrate into the middle of the country shows a lot of promise for what's going forward. They also show that they are a national brand. Indeed, Walmart, Sam's, Costco, Target, and they're in 4,200 total stores with 23,000 points of distribution. And like I mentioned a second ago, you can see those dots spreading out over the country, which is great to see, because dining habits and eating habits and also daily schedule habits are quite different when you're in a big city like Boston or New York or Los Angeles compared to cities that are more spread out, where it's easier to eat at home. Then they also show last 60 days, we introduced Tattooed Chef to the following national retailers. This doesn't necessarily mean that they are in there for sure. They just said we introduced them. So we got 7-Eleven, which is dope because all of 7-Eleven's food is garbage. Whole Foods, Smart and Final, Target. Let's see, other big names: Albertsons, Safeway, Meher, I don't know how to say that, Kroger, Publix, Stater Brothers. A lot of big names, you know, and if they end up breaking into these stores, that's like auto distribution. Wow, they had a typo on this slide. We expect significant official new business awards that will go into effect 2021. Yeah, and I mentioned a minute ago their vertical integration. And so vertical integration just means that you control like from when it's like a seed all the way until it's in the store kind of thing. And again, another car reference, Tesla, like making all of the cars, making all of the batteries, making all of the like everything, and then buying tires from other makers, putting them on and selling them kind of thing. They're very vertically integrated for a car company. But going back to Tattooed Chef, it says we innovate, we design, we plant, we grow, we manufacture. So they're covering all these different portions of it. And what that ends up doing is providing a thicker profit margin in the bottom line, as well as the ability to streamline product launches and product releases, because you don't have to be like, hey, dude, we're thinking about this new product. Can you make it work in your production flow? And they're like, oh, sorry, we can't plant that thing for 3 more years or something like that. Basically, Tattooed Chef is like, we control the farm, so it's okay to do it. We'll make it happen. And so I mentioned their compound annual growth rate a minute ago. One of the things that's really exciting about Tattooed Chef is while it's riding these trends and while it's growing in popularity and it is vertically integrated, they also have a good plan to release more products and eventually be rolling out in a bunch more supermarkets and other chains and outlets. And through that, they're going to see like really, really big growth, I think. Check it out. They show 2021 on the left all the way down to 2026. They're expecting to have $1 billion in revenue by 2026, which is like 5-6x of what they're at now. But at the same time, their EBITDA, their remaining earnings, is also going to be going up because they're vertically integrated. And that's one of the super sexy things about this company that people might not be understanding when comparing to really, really large food makers. And again, if you'd like me to do some more comparison with other food makers or even companies like Beyond Meat or whatever like that, let me know down in the comment section. Next, I want to take a look at some of the risks. What do you think some of the risks are? I think one of the potential risks, now that the pandemic is like losing some of its teeth, people are starting to be able to leave the home a little bit more. I don't think there will be another massive shift back to work at home more so than has already happened. So along with that comes a likely shift away from frozen foods, I think. But here's the thing. I think because they're staying on top of the health food wave and because it's generally like pretty affordable, more so than restaurants, like, dude, vegan restaurants, like when I'm back in LA and I'm hanging out with my friends, like I have this friend who's a vegan guy. He's just like, dude, let's go to this vegan restaurant I want to take you to. We got to drive all the way to Santa Monica. That's where all the vegan places are. And then it's like $40 a person per meal kind of thing. But Tattooed Chef kind of brings a lot of that quality into a much more affordable package. And so I don't think we're going to be too heavily affected by this. And with the growing number of SKUs moving forward, and a lot of people straight up like not having to leave home anymore for work. Like we covered Dropbox last week. Dropbox's entire company has shifted to working at home from now on. And so I think there are a lot of companies that are in that transition or have already made that transition. So the shift to the economy opening up again, I don't think is going to dent their revenues too heavily. What do you guys think about that? Another potential risk that I was thinking about was there are companies like Beyond Meat who are partnering with restaurants. And I think it was Burger King. You could go into Burger King and get a Beyond Meat burger. And so it's like a healthier junk food kind of thing. And I don't see Tattooed Chef doing anything like that. I don't know if that's like a fatal risk for them to have to deal with right now. And again, the target market isn't shopping at Burger King. The target market is shopping at like Whole Foods and going to these like mom and pop kind of vegan restaurants and stuff like that. And so I don't see that as like a major risk. And when I sit down and I think about like what could wreck the Tattooed Chef right now, besides losing Sarah or something devastating like that, it's quite hard to figure out because they have the vertical integration. They have all these SKUs upcoming. They have a good cash position and they're growing in popularity and favor as well as profit margins as well. So that's, I think, one of the things that just makes it so exciting, especially when compared to more traditional food makers. So going on to my own thoughts on the company, I love the stock right now. I think it's about $22 as of filming. I've been buying it little by little over the months. I'm a fan of dollar costing in to a stock and then dollar costing out of a stock too. And if you want to learn more about that, let me know. I don't think we're done yet at 22 or 25 or 28 bucks. I really wouldn't be surprised if we get to like 50 or 60 bucks by the end of the year. And if we're looking at 2025, 2026, it could be actually really big time. What do you guys think about that? Are you as excited about the long-term picture? Let me know down in the comments section. Thank you guys very much for your time. Love you guys. Have a great one. Talk to you soon.